I'm Jim Juback, and welcome to this week's Trend of the Week video. This week's Trend of the Week which is it? Okay growth in the United States or not so okay growth in the global economy? What the confusion in my mind comes from the fact that the U.S. market is rallying, and we're seeing some signs that maybe we're going to expand this rally from the 9 stocks that have been driving up the indexes to include a few more, maybe 20 stocks. Hey, what do you know? So sense there is that the U.S. economy is going to avoid a recession, is going to be decently strong. The Fed is moving toward cutting rates. Okay, the problem is that if you look at the global economy, you get a very different story. It looks like the global economy is pricing in slowing growth. And this shows up most clearly in oil prices. Here's a good ETF proxy for oil. This is the U.S. Oil Fund, ticker USO. As you can see, this has not been a great year. I unfortunately own it in the volatility portfolio, and as you can see, it's been exactly that, volatile. Huge volatility swings. But overall, if you connect all of these peaks, except for this one here, the trend is clearly down. And what we're seeing is that West Texas Intermediate is selling below $70 today on the 13th of June at $69.70 a barrel. Brent is, as always, more expensive, but it's still down, trading at 74.57%. Both of these prices have rallied today, mostly on stimulus news from China. So we think that we're going to see more markets saying, hey, maybe we'll see more growth. But what's interesting to me is Goldman, which is a big commodities trader, watcher, investor, cut its oil price forecast by about 10%. So they're now looking at West Texas Intermediate, the U.S. benchmark, ending the year at $81 a barrel. They had been talking about $89. They're looking for Brent to be at about 86 in December, and that's down a big percentage from the prior forecast for $95 a barrel. I think if you own any oil stocks right now, one thing to do is to make sure that you own a low-cost producer that can make money at $70 a barrel. Not all of them can. Not all of them can make very much money. If you're into U.S. oil stocks, you want to own oil shale stocks in the Permian Basin because that's the lowest cost source of oil. But basically, Goldman cut its forecast based on a belief that demand from China is going to continue to fall, and that supply glut, especially from Russia, where Russia really is going to export as much as it can, whatever its agreement with OPEC is, because they've got this war in Ukraine to finance. So downward pressure from weak demand from China, a glut of oil from Russia, and make sure that whatever oil stocks you own, and some of them are very attractive because at $70 a barrel, somebody like Pioneer Natural Resources, PXD, can still make a lot of money and still pay out a large dividend. Devon Energy is another one that I put in this category. So I'd be selective about what oil stocks I own because this is not a good environment for the global economy, no matter how we feel about the U.S. economy right now. So if you like this video, please give it a thumbs up. Subscribe to my YouTube channel. That way you get notification of when we're doing the next one. We're doing a 3-week, but not always on the same day. And subscribing to my YouTube channel is free. If you want more free stuff, you can go to my free site. That's jubackpicks.com. 3 portfolios for 12 to 18 months, longer term, like 5 years, and then dividends. Or you can go to my paid site. That's jubackam.com. And that's got 6 portfolios where we do some ETFs, some even longer than 5-year picks, and some options. Now, one thing that I've recently put together is a post, very long post, on 10 stocks for a core portfolio. You can get that free on any of my sites. I finally finished it, so it's going up. If you want to get it free on my free site, You can get a list of the 10 stocks in the portfolio for free without having to do anything. If you want the reasons for all of those, you have to actually become a member of that site, which means that you give us your email. Still free. We send you alerts at the end of every day about what we posted, not marketing, and then a couple times a month you'll get a marketing email from us about an offer for the paid site. But anyway, that's the trade-off. That's how the internet works. If it's free, it's, hey, there's always a getcha. The other thing is that this marks the 50th anniversary of my mustache. I grew it in 1973 when I was a graduate student. So to celebrate that 50th anniversary, we're doing a 50% off mustache sale for my paid site. So you can get a subscription for a year for the paid site for $99 instead of the normal $199. So you'll find links to that offer down below. You'll find a link to the how to get the 10 stocks for core portfolio down below. And of course, you can always subscribe to my YouTube channel, and that way you'll see me next time. Thanks very much for watching.